Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. BNY Mellon is getting involved in a new cannabis New York Stock Exchange fund. More evidence of the normalization and companies not wanting to wait. We recently saw that Bank of America started to report on the cannabis sector. Bank of New York Mellon isn't waiting for the States Act or the Safe Harbor Act. They're going to get on board just like BlackRock. So it all boils down to the fact that the normalization is occurring. People see the dollar signs, and they're not going to wait for federal legalization. Bank of New York Mellon will act as a custodian bank to a new cannabis-focused exchange-traded fund, or ETF. For the first time, a New York Stock Exchange marijuana-related fund is seen backing by a major bank. The advisor share pure cannabis ETF will trade under the ticker symbol YOLO. It will have 80% of its assets in companies that derive a minimum 50% of revenue from cannabis operations. At least 25% of the fund will be invested in pharmaceutical and biotech companies that work in the CBD and other cannabis sectors, while there will also be stock involved in non-plant touching segments such as real estate. Your weekly cannabis deal watch is led by cannabis retail and cultivation segments as they continue to lead the pack with regard to capital raises and acquisition activity. Year to date, the sector has raised a total of $3.2 billion and completed 48 M&A deals. That compares with $1.5 billion in 17 deals for the same period last year. In addition, the number of transactions involving private companies in 2019 as an overall percentage continues to grow, 27% so far this year versus just 11% in 2018. Top raises that closed last week include Green Lane Holdings, a distributor of vapes and other cannabis-related products, closed its NASDAQ IPO, raising $102 million in the process. Cannabis, a Vancouver, British Columbia-based cannabis cultivator, closed an equity offering of $28.7 million. And Village Farms International, Canadian greenhouse grower with a 50% stake in cannabis business Pure Sun Farms, closed a Canadian $20 million equity offering. Top merger and acquisition deals that closed last week include Acreage Holdings. They bought Portland-based Form Factory for $160 million. Cannabis One Holdings bought certain assets of privately owned Denver-based JBC Enterprise. And Canopy Growth closed its acquisition of Spanish cannabis cultivator, which cultivates marijuana and is licensed to produce hemp as well. The number of cannabis capital raises may be slightly down so far in 2019 over the previous year, but the amount of money raised is almost double. Cannabis-related businesses have raised $5 billion year to date through 199 deals, compared with $2.8 billion via 222 deals in a similar period last year. Sizes of the equity and debt raises grew over last year for both publicly traded and private companies. Two deals from the past week accounted for the bulk of the $845 million raise. San Francisco Pax Labs, a manufacturer of vaping products, closed a $20 million raise. The raise involves institutional investors new to the cannabis space, which far surpassed expectations of about $150 million in financing. Aphria, the Canadian cannabis cultivator, closed a $350 million debt raise. We haven't seen too many shareholder lawsuits yet, but I believe that with a random number like a $420 million raise set at a valuation is probably not setting a proper precedence when it comes to limiting your liability from a shareholder. I wouldn't be surprised in the future if we see a shareholder lawsuit for the random $420 million valuation. When you are asking a lot of new institutional investors or new investors, period, and you're telling them that there's a valuation and it's an arbitrary $420 million, you're basically just asking to be sued. There's nothing scientific about $420 million except a smirk from somebody who thinks it's funny. So I wouldn't doubt it that if there's a downturn in vaping, or if they get sued by the FDA, or if anything happens to that stock price and anything other than the current injection of capital that we're seeing at a speculative rate, that's really not coming behind any technical or fundamental indicators. When you just set a price at an arbitrary number, you're not really instilling a lot of long-term value. And so if or when that stock comes back down, if there's a correction, if there's a lawsuit, if the entire industry sees a downturn, there will be shareholders looking to get some of that capital back, some of their money. And if that comes in the form of a lawsuit, I'm just saying it'll happen. You can't just put an arbitrary number on that and not expect a lawsuit eventually. Other top M&A deals that closed last week include Cannabis Capital, an Alberta-based capital pool company that completed a reverse takeover as Stigma Pharmaceuticals, an Alberta-based grower and producer of CBD products. Canaccord Genuity Growth, a special purpose acquisition company, completed its merger with Columbia Care. New York-based Columbia, a vertically integrated cannabis business that operates in 14 states and territories, subsequently became the first company listed on Canada's NEO exchange with a market cap of more than $1 billion. And with that, we're going to roll this up. This is the Talking Hedge. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.